Hi class, I'm with you today. We're going to do exercise 5-7. You would find that on page 248 of the Wild book. Okay? All right, so here's my problem up here above. Same situation. We've got a beginning inventory of 200 units. We made a purchase of 350, a purchase of 450, and a purchase of 100. So that gave us 1,100 units total that we could have sold this period. Okay, this year actually, January, March, and October. Then, when I look over here on what was sold, we sold 150 units, then we sold 300 units, then we sold 430 units. So we sold 880 units total. So I know that if I subtract those 880 units total, is that right? 2 and 8, 10 and 1, 3 and 8 is 11. Yeah, I know that I have 220 units in ending inventory, and I need to value those units, okay? So I'm going to value them directly. So these 220 units, since I'm doing first in, first out, that means as we had these sales up here, we would have sold the oldest stuff we had in the inventory, which means that the newest stuff we have in the inventory is what would be left in these 220 units, okay? So I need to get to 220 units with my valuation. Well, I'm going to start with the newest stuff. So 100 of those units would come from the most recent purchase at $25. Okay, and then the whole other 120 units would come from the next most recent purchase, which was at $20. So that'd be what, 2,400. So 4,900 is the value of our 220 units that are left in ending inventory. Okay, now I want to find cost of goods sold. And I can do cost of goods sold two different ways. The first way I can do it is I can say, well, I had a beginning inventory up here of $2,000. I bought a bunch of stuff, and I ended up with total goods available for sale of $18,750, right? You learned that in the last chapter. That's the flow of goods. Beginning inventory plus purchases gets us to goods available for sale. Okay, so goods available for sale, which I will just call goods available, is $18,750. Our ending inventory, we just found out, is $4,900. So apparently we sold $13,850 worth of inventory. Let's test that by directly costing cost of goods sold. Okay, let's go up here to the units sold information in our problem. Let's see, we sold 150 units. Okay, 150 units. Where did those 150 units come from? They all came from beginning inventory, so they have a value of $10. Well, that leaves 50 units left out of beginning inventory, right? There's 200, we just sold 150. Then we sold 300 units. Well, that 300 is going to come partly from the 50 units left over from beginning inventory, so that's $10, okay? And the other 250 units are going to come from the next purchase of stuff that we made. So that was at $15. Okay, so then what do we have left? We took $250 out of the March 14th purchase. So we've got 100 units left in the March 14th purchase. Then we get to our 430 units. Where did they come from? Well, 100 of it came from the March 14th purchase. Okay? So that's going to be at $15. Then all the rest of that 430, which would be 330, is going to come from the July 30th purchase, which is at $20. So see, if you look at 150 and 50, there's our beginning inventory. If you look at 250 and 100, there's the second purchase on March 14th. Okay? And then the last 330 comes out of this purchase. Well, interestingly, we've got 220 units left, so if I take 330 out of 450, there's 120, and there's 100. So there's my 220. So I know I've done this right. I know that this adds up to 880 units. Okay? Let's see what the dollars add up to. Hopefully it'll be $13,850. Okay, 1,500, 500, that'd be 2,500 plus 1,250, 3,750, 1,500, and 6,600. $17, $5, $12, $6, $8, $9, $6, $4, $6, $10, $3. Yep, sure enough, it works out. Okay, so I can either directly cost each sale, or I can back into it if I know any inventory, or I can figure cost of goods sold first, subtract cost of goods sold from goods available, and find ending inventory. You've got all the pieces given to you to work it multiple ways to get this result. Okay, I think that you could work these on your own now. Thanks.